Right now, there's a signal flashing in the Bitcoin market that we haven't seen in over a decade. And if you misread it, you could be on the completely wrong side of its next massive price move.
Look, getting this wrong could have some serious financial consequences. This isn't your usual market chatter, it's a fundamental shift, and we need to figure out what's going on. And that's exactly what we're about to do.
So here's the twist. While the S&P 500 has been on a tear, surging over 16% this year, Bitcoin is actually down 3%. This is not how it's supposed to work. By the end of this explainer, you're going to understand the two competing theories for why this is happening and what it might mean for the future.
What we're witnessing here is a major decoupling event. For the first time since 2014, Bitcoin is on a path to close out the year with a loss, while the stock market is just having an incredible rally. This shatters a pattern we've come to rely on for years.
For the longest time, the rule was pretty simple. Bitcoin was a high beta asset. All that means is when stocks went up, Bitcoin went up even more. It was like stocks on steroids. But in 2025, that rulebook's been tossed out the window. Even with a friendly regulatory environment, all that capital seems to be flowing into other things, leaving Bitcoin behind.
This brings us to the recent price action, which honestly feels like a mystery we have to solve. It's not just that Bitcoin isn't going up, it's that it's sold off, and sold off hard from its latest peak. So the big question is, where did all that money go?
And just look at how severe this was. Think about it. Just back in October, we were celebrating a new all-time high of $126,000. But since then, we've seen a nearly 30% nosedive, pushing the price below $90,000 in just a couple of weeks. The sheer speed of this drop is what has everyone so spooked.
So what caused it? Well, it looks like a perfect storm, really. You had a huge rotation of capital. Investors were chasing these insane returns in AI stocks, while also playing it safe with gold at its own record highs. The momentum that got Bitcoin to its peak just fizzled out. And that triggered what's called a leverage flush, basically a domino effect where traders who borrowed money are forced to sell, pushing the price down even faster. You mix all that with just plain old retail exhaustion, and the whole thing just ran out of steam.
Now, analyzing these complex moves in real time is absolutely essential. But for right now, let's get into what this all means by looking at the two big theories that are battling it out in the market.
Okay, first, let's put on our skeptic's hat and look at the pessimistic view, the bear case. This theory says that this decoupling we're seeing, it isn't just a temporary thing. It's a sign of a much deeper, long-term problem for Bitcoin. The big fear here is that we are drifting into what some are calling a quiet bear market. And no, this isn't about some huge, dramatic 50% crash overnight. It's more like a slow bleed, a situation where Bitcoin just keeps underperforming, because that wave of new retail money that always fueled the past bull runs just isn't coming this time. The core worry? The magic is gone.
But hold on, that is only one side of the coin. Now let's flip it over and look at the other side of the argument. Because the bulls, they see this exact same data and come to a completely different conclusion. They see a healthy, necessary reset.
Analyst Stephanie Willett makes a really sharp point here. She says that just looking at the calendar year performance is totally misleading. Bitcoin had this epic run-up to its October high, right? So this dip, it's just the market taking a breath, shaking out the weak hands before it gets back to doing what it does best, totally outperforming stocks.
So for the bulls, seeing a price tag under $90,000 isn't a red flag at all. It's a for sale sign. They see this as the perfect time to accumulate, a chance to buy in before the trend snaps back and the next major leg up really kicks off.
Okay, so let's just pause for a second. We're left with two completely opposite interpretations of the exact same signal, and they point towards two very, very different futures for Bitcoin. Let's just break it down side by side. In one corner, you have the bears. They see this divergence from stocks as a huge structural problem, a sign that retail interest is totally dried up, and they think this price dip is the start of a long, cold crypto winter. But in the other corner, you've got the bulls. They see the divergence as just a temporary blip, they're convinced retail will be back, and they see this dip as a healthy consolidation, a fantastic buying opportunity.
Which brings us to the one question you really need to be asking yourself right now. Is this 10-year anomaly a historic warning sign that the entire game has changed for Bitcoin? Or is it a once-in-a-decade buying opportunity right before the next epic rally?
This story is far from over, and how it plays out from here is going to be absolutely critical. To stay on top of it, make sure you like,
share, and subscribe to Crypto Global News. And seriously, don't forget to hit that bell icon. That way you'll get regular updates as we track every twist and turn of this unprecedented market event.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.